Everybody is welcome to this space. I'm so excited to present this to the world and my community. This is the Nomadic Trading Academy, and it's a very safe space for everybody with the intention of gaining financial freedom from the Forex market. When it comes to somebody like me, I love to travel the world. I love to see new things. I love to experience new things. So I just don't stay at one place. I move from one place to another, from countries to countries, and I should be able to do anything that I want to do anywhere I want, or still work anywhere I want. So Forex trading is actually a very safe space for me because I'm able to still make money wherever I am in the world. That brings it to the Nomadic Forex Trading Academy, fully empowered by GH Mom Official, our corporate entity. So you are all welcome here. This place is very safe. We are going to have a very nice discussion about how to make this money on the Forex market. So let's dive deep. When we say Forex trading, look at it as a very big shop where we exchange currency. So let's say you exchange the US dollars to the euro, you exchange the US dollars to the Japanese yen, you exchange any type of currency in the world. So let's see what Forex trading is. So in my own way, I define Forex trading as the act of exchanging currencies from one point to another, meaning buying one currency and selling another at the same time to make a profit when the exchange rate changes. I think this is self-explanatory. There are certain key things that we will be diving deep into, like exchange rate, currencies, to those people who don't know what these things are, because the purpose of this tuition is to break it down and make it very, very simple, that my 6-year-old daughter can be able to understand what Forex trade is. So sorry for that. That is my artificial intelligence alerting me on some stuff too. So let's go. The market. When we say Forex market, Forex market is one of the largest markets in the world, with over 6 trillion transaction a day. 6 trillion transaction a day. And look at a market like this. Just go in. That is for me, and that is for the people that I mentor and the people that I teach. Men, go in, take a little bit out of it, and come out. Anytime I go greedy on the market, I lose money. Anytime I go greedy on the market, I lose money. So I told myself that this is a 6 trillion market space. I just go in and take a piece of it for the day, and then I'm done. And we'll be going deep into psychologies and all those stuff. But starting with this, I'm going to advise you not to be greedy on the market. Because with me, anytime I'm greedy on the market, I tend to lose money. Yes. So that is it. Forex market is the largest market, one of the largest markets on the market on the planet Earth, and with a transaction of 6 trillion per day. Yes. So moving forward, let's tackle this important topic, which is exchange rate. So what is an exchange rate? An exchange rate is the price of one currency compared to another. Yes, it tells you how much of one currency you need to get a unit of another. So let's take an example like the United States dollar, comparing it to the Ghanaian currency. I am in Ghana as of now, so I'm going to use the Ghana currency to compare, to make my people understand it as well. It's the same concept everywhere. So let's say you are in Nigeria, you are just going to compare the Nigerian naira to the US dollars, or the US dollars to the Nigerian naira, or you are in anywhere in the world. It's the same concept. So let's say US dollar as at now, the US dollars is 12 cedis as at now. So this means you need 12 Ghana cedis to get 1 US dollars, or you need 1 US dollars to get 12 Ghana cedis. That is exchange rate. Okay, so how does this thing works? If the exchange rate to $1 is 14 cedis, 14 Ghana cedis, it means that the Ghana cedis has become weaker and then the dollar is stronger. Vice versa, if the dollar is 10 cedi, it means that the Ghana cedi is stronger and then the US dollar is weaker. Why does exchange rate changes in the market? This happens based on a couple of things, such as supply and demand, interest rates, economic news, political and global events. Maybe there's a war in places like Iran, Iraq, Israel, and all those countries. These affect our exchange rates. So these are some of the things that happens that affects our exchange rate. So currencies, major pairs, base and quotes, as well as pips. What are these things? Because these are things that we use every day in the financial market, and it requires you to have a very deep understanding about these things. So when we say currencies, what are currencies? So currencies basically means the money our various countries use. When you come to Ghana, we use the Ghana cedis. When you go to Nigeria, the Nigerians use naira. When you go to America spends the United States dollar, and so on and so forth. So let's say, as I said earlier on, United States spends the dollar and its code is the USD. When you go to Europe spends the euro, which is the EUR. When we come to the United Kingdom, they spend the pound, which is the GBP. That stands for the Great British Pound. Now let's look at currency pairs. In foreign exchange, we always trade in pairs because we are exchanging one currency to the other. So when we look at currency like euro versus the US dollar, Great British Pound versus the Japanese yen, these are the pairs that we use to trade. So you'd always have to pair with a currency. Now let's look at major currencies. Major currencies, they are the currencies that are mostly traded widely in the world, and mostly it involves the US dollar, because the US dollar is one of the currencies that is mostly traded in the world. So pairs like Euro USD, British Pound and US dollar and the Japanese yen, US dollar and the Swiss francs, Australian dollar and the US dollar. These are all currency pairs. Now we have the base and the quote currency. When you open a trading platform or when you go to this foreign exchanges, the first currency is the base and the second currency is the quote. So let's say Euro USD. The euro is the base and the USD is the quotes. What is pips? Pips stand for percentage in points. It is the small unit used to measure the price movement in the forex market. So usually it's the fourth decimal place in most currency pair. Example is Euro USD move from 1.2000 to 1.2005, and then the pips, since the pips is the fourth decimal places in the currency, we have 5 pips in movement, whilst the Japanese yen moves in 2 decimal places. So example is USD JPY, which moves from 110.50 to 110.70, and then it is a 20 pip movement with that. Great. So trading, like any other profession, goes with its special tools. In this section, we are going to dive into the tools every trader needs in his or her arsenal. So with trading, we have platforms like MetaTrader 4, which is the most popular trading platform, and its upgrade is the MetaTrader 5. What happens with the MetaTrader 5 is that it has a lot of advanced features compared to the MT4 trading platform. We move straight to the charting platform, which is the trading view, and with the trading view, mostly we use it to do charting analysis. We use it to analyze the market and then place our trade in either MT4 or MT5. Let's look at one important topic you have to know as a trader, that is a lot size. A lot size is the size or amount of currency you are trading. So the lot size determines the amount of money you are trading. Now let's break the lot size down and really understand it. So we have different types of lot size. We have the standard lot size, we have the mini lot size, and then we have the micro lot size. The standard lot size starts from 1.00 with a unit of 100,000 units. The mini lot size starts from 0.10 with a 10,000 units. The micro lot size, which is mostly for beginners and always advised to always start from a lower version, which is the micro lot size, with a size of 0.01 with 1,000 units in size. Now let's come to leverage. Leverage lets you control a big trade with a small amount of money. So the concept of leverage is like borrowing. You go into the market to borrow money to help you place bigger size. When it comes to leverage, with $1 you can place $100 trade, as well as with $1 you can place a $500 trade. That is through the help of leverage. The broker is the company that connects you to the forex market. So the broker is the intermediary between you and the market, and we have a lot of brokers on the market. I will drop my broker in the link below so that you can easily have access to them. I've been using them for quite some years now, and they are reliable, they pay fast, and with a very good customer service when you need them. So the broker gives you access to the trading platforms, access to the charting instruments, and also leverage setting, as well as a trading account.